Hi all, and thanks for joining us at Framework FX, and today we're looking at the MACD 200 EMA strategy, and we're going to be backtesting it and analysing it, and the results really are quite interesting, so stay tuned for that. But before you do that, if you could like, subscribe and ring that notification bell, it would really help as we begin to grow the channel. Okay, so this strategy is a simple one, but it's a good one to know. Okay, it teaches you how to filter well, and I think you're really going to enjoy it. The results are quite impressive, so make sure you stick around for them. We're going to look at how the strategy works, how to apply it, and then we'll take a look at the results. Okay, so stay tuned. Okay, so let's take a look at the strategy that we're going to be using here to backtest. Okay, it's the MACD strategy as mentioned before. So the first thing to mention is the time frame. So we're on a 30-minute time frame, and for the purposes of this example and the backtest, I'll be using the pound dollar. Okay, so the first thing we need to do is get up our MACD. Okay, so we come into the indicators and we pull it up here, and this is what it looks like down here. Let me make this a little bit more obvious. Right here. Okay, as you saw there, sorry, I'll just bring it back up again. We have two lines. We have the MACD line, which is blue, and we have the signal line, which is orange. Okay, and basically what the MACD is it's two moving averages, and the MACD is looking to sort of work out the difference. It stands for moving average, convergence, divergence, and it's just looking to find the difference between the two and see if it can give you an idea of the momentum of price, which way it's going to go. Okay, it's a very simple technical indicator. It's used right across the board by many different traders, but it's very easy to get the hang of. Okay, so what we're looking for really with the MACD is we're looking for these crosses. Okay, we're looking for the blue line to cross the orange baseline. Okay, and that's when we're looking to get involved. But the thing about this is you can't just take every cross, because as you can see here, there are many and they don't all work out. So what we need is a filter. Okay, and for this we bring in our good friend, the exponential moving average. Okay, and here it is. Again, let me make this a little bit more obvious. There we go. And we're going to be using this as a 200 period moving average, and it looks something like that. Okay, so this is what we're looking at in this strategy. We've got our exponential moving average filtering our trades, and then our MACD looking to give us an idea on when to enter. Okay, so the strategy has several rules, and they go like this. Okay, when price is above the exponential moving average, we're only looking for buy trades, and when it's below, obviously we're only looking for sell trades. Okay, that is the first filter. After that, we're looking for these crosses. Now, as you can just about see here, there is a zero line that runs through here. Okay, so when we're looking, for example, for buy trades, we are looking for a cross, the blue line coming from below to above the orange line, and we're looking for it to be below the zero line, and we have one right here actually. I hadn't planned this, but let's take a look at it anyway. Okay, so this meets all of our criteria. We're above the exponential moving average, meaning that we're only looking for buy trades. The blue line has crossed from below to above the orange line, and we are below this zero line. Okay, so now we're looking to enter the trade, and we're looking to enter a long position on the close of the candle that crossed, which is about here. So we put our order there. Now our stop goes below the most recent swing low by a couple of points to give it some breathing room, which is about there, and then we're aiming for a 1 to 1.5 ratio, and as you can see here, unfortunately this one didn't quite work out, but that's going to happen. This isn't a 100% accurate strategy, which none of them are. If you've been watching the channel, you will hear me repeat that regularly. Okay, so that's as simple as the strategy is, guys. We're above the exponential moving average, we're looking for buys, we're below it looking for sells, and then we're looking for a cross above or below our baseline, and above or below this 0. So let's see now if I can find another good example for you quickly before we get into the results. Let's have a run. Just pause it here. Another nice thing is you can look at this now and you can say, okay, we're below the exponential moving average, so we're only looking for sell trades, and also we're below this 0 line, which means that right now we're just a bystander. Okay, we're not involved, we're not looking to get involved. We don't really need to be involved until this gets back above the 0 line while it's below this exponential moving average. So let's take a watch. Okay, so now we're above this 0 line. The blue line is above our orange line. We're below this exponential moving average, so we're looking for sells. Okay, and now we're interested. So now we're just looking for this blue line to cross back from above to below the orange line. Okay, let's see if we can get that. We're not quite in there, I don't think. It's very flat. This can happen. Not quite crossed it. Not quite crossed it. There we go. Okay, so we have a cross there, the slightest of crosses, but that is a valid cross. Okay, so all of our rules have been met now. Looking for sell trades below the exponential moving average, and then the blue line has crossed from above to below the orange line, and we are above the 0 line. So we're looking to enter. We're looking to enter a short position right on that close. Price stop goes just above the most recent swing high, so around about there by a couple of points, just to give it some breathing room, and then we're looking for a 1 to 1.5 ratio. Okay, so that's what we're looking at. Okay, and oh, sorry about that. Straight away, we've clipped out right about there. And that's what it looks like, guys. It's that simple. It's that simple. That's a quick trade, you know. That's a pretty quick trade, and we're already in. We've made our 1.5R, and it's, you know, it's that simple. Okay, it's easy to learn. It's easy to get a hang of. The rules are very simple. Everything about this strategy looks good. So let's go and see whether the results quite match up to how good this strategy looks. I'll see you in a sec. Just before we get to the results, guys, over at Framework FX we run a copy trading service where we take trades and they open up in your account. It may be of no interest to you, but it may be of interest to you, so it would mean a lot to us if you could jump across there and take a look at that. Cheers. Okay guys, so the results are in, and this is what they look like. And the first thing we need to take a look at is the profit. So the profit is over here, and it is taken plus 56% over the year. So just to clarify, this was on the pound dollar, 30-minute time frame, and it took from January 2020 to December 2020, and it took plus 56%. So that's pretty great. We're pretty pleased with that because it was a strategy that didn't take a lot of managing really, and that the win rate on it was 64.04%, so about 64% win rate, and that's exactly really where we want to see our win rate. Okay, we don't want to be looking with a 1.5 to 1 risk reward ratio. That is more than perfect. Okay, we don't want to be seeing these 90+% win rates, etc. Really, especially not for a strategy like this. That is, you know, that's just very strong, exactly where you would want it to be. Okay, so this strategy took 89 trades. It had 57 wins and 32 losses. Okay, so it averaged about, let me take a look at this. It averaged about 7 trades, just over 7 trades a month. So that's really not a massive amount of trades when you think about it. 7 trades a month. This strategy might not be for everyone for that reason. Some people like the fast pace of it, but for a lot of people that just like keeping an eye on the markets, maybe it's a second income, you know, maybe they're doing this part-time, this could be the perfect strategy for you, okay, especially on the 30-minute time frame. So 56% off 89 trades, I am more than happy with that. So let's just pull these up individually and take a bit of a closer look. We'll just quickly run through this part of our results first. We've just touched upon them. As you can see, we go through the months here. They've been pretty consistent. We had a bit of a lull around May, but again, not a single losing month. That's great. We're always looking for that. We had a bit of a lag again around November, but if you're not losing money, that's great. Okay, that's exactly what we want. So what this strategy did really well, I'll touch upon it here, is it did keep you out of bad trades pretty well. Okay, and we'll talk about that a bit more in a minute. But this monthly breakdown here, I think, gives really good evidence of how well it kept us out of bad trades. Also, you can see, March, April time, you can see that where it sort of took a few more trades, we maybe did a bit better. Okay, so again, giving that win rate chance to play out was pretty good. But nothing really to describe there. Like I said, they're pretty consistent trading months. I'd be really pleased with that if I was looking at it in my bank account. So then let's take a look at this big wedge of information over here. And the first thing I want to point out, as I always point out, is one of the most important parts of any strategy, the drawdown. And as you can see here, -3%. That is fantastic. Okay, that is really solid, really great. It means not only that we could look at maybe increasing our risk on to maybe 2% because we have such a low drawdown, but what it could also mean, and again we can go into this a little bit further, but it means you can combine it maybe with other pairs to really hammer home that profit at the end of it. Okay, but yeah, -3%, that's brilliant. What else do we have here? So what do we have for long trades? Okay, so we took 44 long trades, 45 short trades. So again, no real bias in that. That's pretty good. We're happy to see that. Took pretty similar profits between the two of them. So again, nothing really to try and narrow down on that either. So if we drop out of that, let's go across and take a quick look at the days of the week. And again, if I pull this up here, the days of the week not really telling us much more than we already know, and that is that this strategy is pretty consistent. Thursday was our lowest day, but again, not by much. It's pretty consistently weighted throughout the week, which is again great because it means that you're looking for opportunities every day. We're not having to miss a day because maybe it doesn't perform so well. So again, not much to say on that. That's really good. That's where we want to see it. And if we pull up then the hours of the day, and here they are. So with this again, I'll point out that we are a UK based company, so I am looking at sort of 7 AM as our open, which is right here. For me personally, I like to trade between 6 AM and 7 PM. So if we take a look at this first, if we break that down, so between 6 AM and 7 PM in the evening, we took 54.5% profit. Okay, so we're only 1.5% off our actual overall, which means that if you're trading them hours, which is ideal for me, if you're trading them hours, then actually you're not really giving away much profit overnight. That is perfect. So I would be really pleased with that personally. Maybe not so great for some other traders around the world, but here that's great. If we're looking at around the openings, so sort of around 7, 8, 9 o'clock in the morning, again taking pretty strong profits. 8 AM you can see there 9.5%, quite a bit higher than most of the other areas. So that's saying me, as this is sort of again a bit of a trend following strategy, that's telling me that we're getting a breakaway maybe at the 8 AM. The markets are deciding straight away as they open which way they're going, and we're jumping straight onto that trend and getting in there well. And that sort of reciprocates through the day. At 12 o'clock again, we've got another nice big spike of 9%. You often see a lot of movement at 12. You often have a lot of press releases, things like that. So again, it's getting us in on them trends. And you look again at 3 PM, just after the US Open, we've got another good push at 7.5%. So you're looking at these are trading pretty well around the openings. But again, as I say, they're actually pretty well balanced throughout the day from 6 AM till 7 PM UK time. So that's great. Everything there is in order. Everything is what we would like to see. Okay, so if we move across from here and let's take a look at the visuals. And again, it's just backing up what we were saying before, okay? I mean, that profit or equity curve is as good as it gets. You know, that is exactly what we're looking for as traders, and it backs up what I was saying earlier. Okay, it's really consistent, and this strategy keeps you out of bad trades, okay, which is the key. It might only take 89 trades across the year, but we know when them trades come around, they're going to be good, high quality setups, and this equity curve gives you that straight away. As you can see, there's not many losing periods. It's not a straight line, which we wouldn't want it to be, because they're probably not real, but it's not far off, you know, because again, we know that the trades don't come in really often, but when they do come, we know that there's a high chance that they're going to be a winner. And also, because we're using a 1.5 to 1 risk to reward ratio, we know that when they do come, we're going to be clearing up the losses that we've had. So that's great. That's exactly what we want to see from a profit curve. From the bar chart at the top, again, it's just showing that perfect consistency throughout. We've clearly had weak months February, May and November, but again, they're the right side of that line. Okay, they're still profitable months, you know, and you're going to have good months and you're going to have not so good months when you trade, but the key is that when you get those not so good months, they're not really damaging to your account, and those months weren't. So again, everything I'm seeing here just backs up the fact that I think this is a really great strategy. Okay, so as for notes, guys, to be honest with you, I haven't really got any for this strategy. I know that's a bit of a sellout, but the truth is I think it is probably at the point where it's tradable, where it works well, and I wouldn't really want to tamper with that too much. It's already got a filter in there, and I think you would just be looking maybe at over filtering the strategy if you carry on manipulating it. But what I would definitely say is that it can be tailored to suit your own trading style, your own trading preference. Okay, so what I would say is take it away, test it on different time frames. I think that would be important. It might work on a lower time frame, I'm really not sure. Test it on different pairs and work out, you know, what hours will work best for me, etc. I think that is definitely where you can take the strategy and have a look at it. But as for the actual rules, I think they're in a pretty good place, and I think the profit on this backtest shows that. So all that's left for me to say, guys, is thanks so much for joining us here again. Please do like and subscribe. We're going to have tons more videos just like this. We also have a free Telegram group. Feel free to drop in and join that. And also, as mentioned earlier, if you could look in on frameworkfx.com and check that out, that would be really great. Okay, take care everyone, and happy trading.